All right, Jay, who you calling for the Super Bowl then?
Ooh, we're doing Super Bowl predictions. Okay, I'm going Eagles.
Yeah.
In 4 quarters. I'm pretty sure of that one. 23-20.
23, you're trying to like it. Mauricio.
Eagles 33-27.
Nice couple Eagles. AJ, you gonna make it a clean
West from
sweep?
Kansas City Chiefs, baby. Kansas City, I'll goes over 25. Eagles under.
When it comes to football, AJ, you don't always have to support your spouse. You should know that by now. But
I just support the winners. So
the real answer is Eagles. I'm saying the Eagles are scoring 38. Saquon Barkley is going to get 2 touchdowns just himself, and we're going to hold Kansas City to 26. That's my prediction.
Welcome to Drunk Real Estate. Grab a drink and enjoy the show.
Hey there, welcome to episode 83 of Drunk Real Estate. I am Kyle Wilson, Ashley Wilson's husband, and it is Super Bowl week. Go Birds. You guys excited? Jay, you excited to watch the Birds win the Super Bowl?
The Orioles are in the Super Bowl?
I mean, different sport and different city, but...
I grew up in Baltimore. When I hear the Birds, it's the Orioles. They'd probably beat the Eagles, too.
Okay, with Eagles, yeah, I'm sure Orioles are better than Eagles as far as Birds.
Did you guys see somebody posted a Chat GPT discussion where they asked Chat GPT, or maybe it was Gemini, maybe it was Google Gemini. They asked the AI who won the Super Bowl, and they said that the Kansas City Chiefs won. So
it's rigged. We already know.
It's basically somebody knows. AI knows that you guys.
The referees already wrote the script. That's what it is. You drinking, Jay?
I'm actually not drinking. I'm drinking. I'm giving a bunch of blood tomorrow. So it's
Why would you schedule a bunch of blood the day after the podcast?
Why can't you have one drink when you're giving blood?
I probably could, but I'm choosing not to. So I'm going with some decaffeinated green tea, and I'm going to try and stay healthy for one day before I have to give blood.
Remind me to tell you the story of when I was in Russia and I went out and got shit-faced till 4 a.m. and then found out at 8 a.m. that I had to give blood. That's a good one. Mauricio, what are you drinking?
I'm back to dude. I actually thoroughly enjoyed my High West single malt whiskey, and so I'm back. And I was telling you before we hit record that unlike wine, where I can drink a whole bottle of wine before anything happens, dude, I take one whiff of the stuff and I'm already starting to feel it. So bear with me.
Yeah, I already looked it up. I got to go to Delaware to find that, but actually, I do go to Delaware. It's not that far. Delaware is only like 40 minutes from me, and it's no tax on alcohol. So we make a trip every quarter. Just stock up. It's nice. AJ, little technical difficulties. You're in a different setup here. We don't get to see Ernie. I'm sorry.
I know. Poor Ernie. I feel bad. I left him all alone in there. But yeah, little technical difficulties. I'm in my office, but that's right.
This is what happens. Producer Alex wasn't able to attend today, and just all hell breaks loose. Nothing works. So I think she probably set it up so only she could work it, just so she has a job for life. What are you drinking, AJ?
I got my Diet Coke in my red Solo cup, ready to go.
Nice. Okay, well, I'm going. I forgot that I had this. I tried this in a previous episode, and I wasn't a huge fan, but I thought I'd give it a second chance. It's called Crosswater bourbon whiskey. It's a little smokier, so like I think it's a bit of a cross with like it's not necessarily more bourbon, maybe a Scotch kind of cross blend, but I'll give it a go and see if second chance is better.
Kyle, do you ever smoke cigars? Maybe next time we should get some cigars while we're drinking some Scotch and some whiskey.
Actually, so my wife's dad is like cigar aficionado. Like he gets like the magazine and reads it. His basement, he has like a 6-foot like cabinet humidor. And so as like a bonding experience with my father-in-law, when Ashley and I first started dating, I started going to Cigar Fest with him every year. And every year you go there and they give you like 80, 90 cigars. And I smoke like casually, like one a month. So now I've accumulated, I have like 600 cigars in my basement right now. So I'm, yes.
I want to go to Cigar Fest.
Yes. So you want to come down for it? I think it's in May this year.
Let's do it.
All right. It's a date. All right. We ready to get into this, gentlemen? Nothing else to banter about. I want to talk about tariffs. It was like 2 days ago, tariffs was going to be a much more interesting topic. And because there was a flurry of a week, it was like Trump imposed a tariff deadline on 3 countries, China, Mexico, and Canada. And everyone freaked out over the weekend. They thought it was a full-blown trade war happening. And then apparently it just seems like it was a negotiation tactic because both Mexico and Canada pushed off the tariffs for what seemed like very insignificant concessions. But the deadline did come and go for China, and they did not strike a deal. So now we're left asking, what is next for tariffs, China, everything? So Jay, why don't you give us a rundown of what exactly happened this week regarding the tariffs and what we should expect going forward?
Yeah, it's been a little bit of a roller coaster week, and I'm going to start with some fair warning here. So I know we have some listeners out there who can't handle me criticizing Trump, and I'll own the fact that I probably criticize him more than I should. But for anybody out there that's like can't handle me calling out Trump, you probably want to get ready to leave some nasty messages in the comments right now because
please do. Please, I really enjoy reading those comments. So if you have a nasty comment for Jay, please do not hold back.
And don't worry, because I kind of expected, since I knew Jay was leading this topic, so I went out and I looked for some good things to say about Donald Trump, and I have them all queued up. So I thought you were going
to say good things to talk about Jay, which it's a very short list, very, very short list.
I'd have to go to the dark web to try and find that.
Let's be clear. I really believe what I'm about to say. So if somebody in the comments wants to argue with facts or data, I'm open to that. But okay.
You can't even find good things about Jay on Reddit, by the way.
Yeah, that too. And you know what else you want to make sure you absolutely do not do? After you listen to Jay's little keynote right here, whatever you do not plagiarize and go on social media and repost as if they were your own thoughts, because Jay will lose it.
I didn't lose it at all. But for anybody out there listening, basically, I wrote this really long post on tariffs on Facebook.
Wasn't that good? Wasn't even that good.
It got hundreds of likes and shares. And
those are all vanity metrics.
Tens of likes, Mauricio.
Tens of likes. And then on Monday, I found some guy who like posted to his friends, including me, like he basically cut and pasted everything I wrote. But he didn't unfriend me. If he would have unfriended me first, I wouldn't have seen that he plagiarized it. So, okay. Back to the topic at hand. We're talking about tariffs. Let's I think this kind of applies to both countries, but I'm going to start with Mexico first. And to kind of convey what happened, I want to give an analogy. I want to tell a little story. I'll use a big word here that Kyle won't understand because he's Canadian, but I want to use a little allegory, a story that kind of conveys what happened. So once upon a time, let's say I walk into a Chick-fil-A for lunch with Mauricio. I order a chicken sandwich.
Well, I've never in my life been to a Chick-fil-A. Just FYI.
Oh my God, are you really going to interrupt me every 2 seconds? I'm never going to get through this.
It's already going to take an hour, Mauricio.
It is.
For our sake,
wait. But we've done this before where Kyle puts a timer on for like 7 minutes. Can we do that again?
No. So, Mauricio, you and I walk into Chick-fil-A for lunch. I order a chicken sandwich. You order something. We grab our food. We sit down to eat. But it turns out that when I open up my bag, they didn't give me any Chick-fil-A sauce. And I'm not eating my chicken sandwich from Chick-fil-A without Chick-fil-A sauce. So I hop up, I walk over to the counter, the kid behind the counter asks, hey, is there anything I can help you with? What do? I demand to speak to the manager. When the manager comes over, I start ranting about how this is the worst restaurant I've ever eaten in. The food is practically poisoning me. I'm going to leave a 1-star review on Yelp. I'm going to leave a 1-star review on Google. Then I'll probably stand outside the restaurant and boycott the restaurant for the next week. And I just go off like a lunatic. Manager looks at me and says, well, I apologize. Is there anything I can do to make things better? And I say to him, absolutely not. Nothing you can do to make this situation better. And so then the manager and I just kind of keep standing there staring at each other for a while. I'm holding up the line. I'm pissing everybody off. Finally, after a few minutes, I look at the manager and I say, look, I'll make you a deal. Give me a packet of Chick-fil-A sauce and I won't carry out any of those threats I just made. Manager says, okay, grabs a thing of Chick-fil-A sauce, hands it to me, and I walk back to the table. Now I start bragging to you, Mauricio, about how tough I am, how great of a negotiator I am, and how that manager basically just caved into all of my demands and handed me a free packet of sauce.
Yeah, but you're implying that for Mexico, they were already planning on sending 10,000 troops to the border, and
I'm actually not. So in this analogy, in this allegory.
First of all, you called it an allegory. Now you're calling it an analogy. I have actually seen you do this. So this is actually a true story. This is not some like made up hypothetical. This is what happens when you go out with Jay.
This actually happens.
One day I'm gonna tell my Costco story, and you guys are gonna lose your minds. I'm gonna do that next week. Tune in, everybody, next week. I'm gonna tell a Costco story that everybody's gonna lose their minds. Anyway, what is the Chick-fil-A pack here? It's 10,000 Mexican National Guard troops that Trump wants on the border, that he's demanding that Mexico send 10,000 extra National Guard troops, Mexican National Guard troops, to the border to protect the border. And Mauricio, Kyle just said like they hadn't already promised that. And so you might be thinking the only way Trump is going to get those 10,000 National Guard troops at the border is by threatening these tariffs. That there's no way that Mexico would have deployed 10,000 extra troops without some major threat or without receiving something in return. But here's the thing. 10,000 Mexican National Guard troops, extra National Guard troops to the border, was the exact same ask that Joe Biden made of the Mexican president back in 2021. Biden asked the Mexican president for 10,000 extra troops at the border, and you know what? The Mexican president agreed. Biden didn't make any threats. Mexico didn't ask for any concessions. We just asked, and they agreed. So long story short, unless something's changed, Trump literally could have just picked up the phone, called the Mexican president, and said politely, hey, can you throw 10,000 more National Guard troops on the border? And she probably would have done it. But instead, he decided to initiate a crazy trade war, piss off Americans, piss off Mexicans, destroy a strong relationship with one of our biggest allies, and in the meantime, send the message to the world that we really can't be trusted to negotiate in good faith.
Well, but at the same time, it's not over, right? It didn't this just buy us a month? He pushed it off a month and kind of just said, okay, that's a show of good faith.
But the problem is he overplayed his hand this first time. What happens the next time I walk into Chick-fil-A and the manager sees me and what's he going to say to his employees? Is he going to say that be careful, that guy, he's a tough negotiator. He just got a free pack of Chick-fil-A sauce from me by threatening me. No, he's not going to be scared of me. He's not going to think I'm a tough negotiator. He's going to tell his employees that I'm a crazy customer. And the next time I start ranting and raving, they should just throw a couple extra packets of sauce at me to shut me up. Oh, and they'll probably also spit in my food from now on every time I walk in there. So what did I really gain by going nuts over such a tiny little ask?
You think it's over? You don't think this is just being pushed off for a month and we're going to be back at like a month from now? He's going to be saying, "Hey, the tariffs are coming again," and
we might. But he's now sent the message with both Mexico and Canada, just like I told you guys he would, that he's not planning. He doesn't want tariffs. Tariffs are bad for the U.S. as much as they are. I mean, actually, that's not true. They're worse for Canada. They're worse for Mexico. They're in a much more precarious situation than the U.S. is. But at the same time, they're not good for the U.S. And he doesn't want to implement tariffs. And it was pretty clear with all the tough talk and all the rhetoric and all there's no demands I'll accept that we weren't going to. I sent you guys an hour before Mexico announced that the tariffs were off and a few hours before Canada announced it. I sent you guys a text saying this isn't happening. Worst case, we have tariffs for 24 or 48 hours, but this isn't happening.
Yeah, Jay's been calling this since the beginning, that these are just threats. It's never going to happen. Or if it does happen, it's going to be for like 5 minutes. So I'm with you on that. But the question I have, though, is the 10,000 troops, that seems to be directed to the border crossing. But he's also talking about this whole fentanyl thing, right? Because obviously
that's Canada.
I'm in SoCal. Is that because I'm in SoCal? We get a lot of the fentanyl stuff coming through here as well. So the question is, what exactly does he want? That's the part that I think everybody is unclear about. Is he really want the help with the fentanyl? Does he really want help with the border, or is there something else bigger?
He wants to look tough. He wants people to fear him so that he can implement maybe some agenda in the future, or maybe just because he wants to look tough.
So if nobody fears him, and if nobody cares, why does everybody freak out? Why does it send stock markets reeling, and why do countries' leaders go nuts? If it's not a big deal, if nobody cares, if they're just going to give them a Chick-fil-A package.
That's why I do think there's some end game, but it's also these tactics, they are confusing me as to what the end game is. Because I guess I looked at this as because I tried to shift it and say, okay, like Trump ran as a businessman, right? And he's going to treat the country like a business. And if you have a big, well-run business, then you take advantage of it, right? Like if you have trade advantages or you have, economies of scale or over ever other smaller businesses, then you're going to use those to your advantage. You could see bigger shops, even in our industry, they get better loan rates and they get, they get property management companies give them lower percentages, and they get all these different things. And to me, I was just like, okay, Trump with his tariffs and all these deals and stuff, he's just recognizing that the U.S. is the biggest and best company of all the countries, and we should get better deals for it. And that's what this was, how he was going to go about getting this plan. But I guess I don't really know, after this flurry of what happened, I don't really know what his end game is. We didn't address the fact that China didn't, cave, isn't sending any troops or doing any of these things. And so they
actually countered. They actually countered with their own tariffs.
Right. Which the other two countries did counter with their own tariffs as well. But the other two, like Canada's put some like serious tariffs back on the U.S. I feel like China's tariffs weren't that serious. It was kind of like, it was kind of smart, I thought, with China's tariffs, because at the end of the day, tariffs hurt yourself more, I think, than the country you're tariffing. So they were very calculated in doing it, and it was very different than the tariffs that they did back in 2018 during that little trade war with Trump.
China's suffering these days. China's not the same China they were 7 years ago when the first round of tariffs. China has seen a weakening economy. They've seen a weakening labor market. They've seen a weakening currency. And a lot of this, without going into deep detail, a lot of this has to do with currencies, and trade wars end up messing up currencies.
But I think, though, this play has a lot to do with, because it isn't the same, and it doesn't hurt America like it does them, not even close. So to give you any idea, 80% of all of Mexico's exports are to the United States. 80%. Their immigrants alone into the United States, illegal and real, bring back over $60 billion a year is what is sent to Mexico. That represents 4% of their GDP.
And you know why the U.S. makes up such a high percentage? Because back in 2019, 2020, Trump negotiated a trade agreement with Mexico that said the vast majority of their stuff had to come to the U.S. and we would buy it. And so Mexico is held to that agreement, but we're no longer holding to that agreement. And so there's now nothing stopping Mexico from going and forming other bilateral or multilateral or regional trade agreements with other countries.
It doesn't equal the same, though. It's the Mexico, to say they're surviving on the United States is an understatement. That's just the exports. You take in tourism, you take in everything else that the United States brings to Mexico. It is Mexico's economy. And that's not something you can trade with Italy. You can't go and say, like, oh, Chile's going to make up.
Mexico's a different story than Canada.
Yeah, and you also have to weigh the effects of, okay, if you put a 25% tariff, and so Mexico just raises the price of their things at 25%, then it shifts the whole, like, something like avocados. Everyone talks about avocados, obviously, because that's like the most famous thing that apparently everyone loves coming from Mexico. If all of a sudden the price of avocados went up 25%, sure, we could, start growing more at home, or we could, try and find some overseas supplier of avocados. But in general, the price of avocados are probably just going to go up, and we're just going to pay them. And Mexico, there's going to be a few Mexican businesses that are hurt, but it's, we're going to end up just paying 25% more in a lot of cases until we can ramp up production locally. So,
first of all, I don't understand this avocado thing. I mean, literally the avocado capital of the U.S. is right next door to me in Fallbrook, California. So
Mexico does supply 80% of the U.S. avocados, though. So, and
the other 20 is right here next to my house, and is that why I'm not feeling it?
Well, no, that's when I go to the grocery store. I have three options. I know a lot about avocados because it's my daughter's favorite thing to eat. But there's three options of avocados at the grocery store. There's the little bagged like one that you get from some farm in Mexico that, they're small and they probably were grown and picked 2 months ago. And then there's a bigger one of the nice big farm. And then there's the organically grown local one, probably from California, that is $3 an avocado instead of 80 cents from the one from Mexico. So
you should definitely bring your daughter to the annual avocado festival here in Fallbrook. I think she'd enjoy it.
Okay, so but think about this though. We think of this like as a lateral thing, which I don't think you can think of tariffs like this. So first of all, the lateral thing that we think of is, oh, you pay a cost and then, oh, okay, we have to pay for it on our end, which, yeah, that's true, right? Of course there is that, but it's the second, third order that actually matters. Now, I'm not saying tariffs are good. That is not what I'm saying. But to say that it's just simple like, oh, we pay, it's not. So here's a list of companies that are moving their stuff into the United States. We have the Corporal Electronics, which is moving all of their production now into where? Texas, because they're like, we don't want to deal with this. And also the tariffs make it so it's basically the same, yet we can actually do more business that way. You have a Swedish hygiene product maker. You have Hyundai. You have what are they called? The tiny one is Invecta company. The LG and Samsung changing their productions. LHVM, which is the French luxury conglomerate, moving over. You have the Volkswagen and Stellantis. I can't remember.
But you're missing the big point, AJ. I mean, if we want to force manufacturing in the U.S., we can certainly do that. Think back 50, 60 years. We had tons of manufacturing in the U.S. Why did it go overseas?
Because it's cheaper.
Because it's cheaper. So yes, we can force manufacturing in the US, but the cost is going to be inflation. The cost is going to be everything's going to be more expensive. Why should Americans and American business owners be regulated to the point where they don't have the option to choose a cheaper product, where they're basically forced to pay more money? You either pay for the American product, which is more expensive, or you pay for the import, which is tariffed and more expensive.
This is a form of, again, it hasn't happened, but if we do have tariffs, it's a form of warfare, right? It's an economic warfare. And so just like you have a real war and you're sending soldiers out to do the battle, here you're sacrificing folks who have to pay more at the grocery store, eggs, all that stuff. And who gets hurt the most in these trade wars? Like, does anybody here on this podcast care whether eggs double in price or milk doubles in price or gas is $25 a gallon?
Well, if avocados double in price, it would.
If avocados double, I know that probably next year. But like my point is, the folks that pay the price the most are the middle and lower middle class, because that their percentage of income that goes towards those necessities is much higher, and so they're paying the price for whatever this war is. And so that's the issue that I have with it. He's clearly using this war as a bargaining tool, as a chip, as a whatever you want to call it. But at the end of the day, it hurts. It's war. Somebody's going to has to sacrifice, and it's not him and it's not us. It's the middle class.
Can I throw out a crazy idea that I thought of? And I don't think this is what he's doing, but if it is, like to me, like this would make sense. We have had multiple episodes where we talked about how the fact that basically the U.S. with their deficit and their we can never balance a budget and all these different things, and we owe $30 trillion, and it's a slippery slope, and at some point we're going to have to deal with it, right? How are the ways that we would deal with this? So the ways we would deal with this, we'd have to A, raise taxes, right? B, we'd have to spend less money, so we need to have a budget surplus to start paying this down. Or C, the hidden tax is inflation, right? So inflation, it lowers the value of the dollars of our debt, and it also typically brings in more tax dollars to the U.S. government. And one we never discussed is tariffs, right? Tariffs technically brings in more money to the U.S. government. So if he implemented tariffs and it led to inflation, those are two different things that would technically lead to a surplus in our budget and pay down our deficit. And of all the other options of increasing taxes, cutting Social Security, doing all these different things, tariffs and inflation, those are a plan. I'm not saying it's a great plan, but those are a plan that could technically get us there.
The problem with that is that tariffs right now, it's like less than 2% of our total income. Like back in the day, it was 95%. It was the majority of the income of the U.S. was through tariffs. Today, it's like 1.5, 1.6%.
Right. So raise them. I guess that's my thing. And if you do it strategically enough,
15%. It's not like you're suddenly going to eliminate the income tax or anything like that.
I think that we will never be an exporter fully. That's not how our economy is not set up for it. And I think it's great that we have good, strong relations. And I would think it's awesome if we went and had no tariffs. I'm not a fan of tariffs. I am a fan, though, in utilizing tariffs to penalize our partners that are bad players. And that is not, we've basically been letting some of these people just get away with murder. Like, it's wild.
Yeah, leave Canada out of it, though.
Well, no, that's the whole point. Like, we're attacking Canada, we're attacking Mexico. What's the demands? How have they been bad trade partners? How have they been like? What
well,
have they
I
done?
think Canada might kind of just get lumped in with Mexico with these things because we do.
But how
have
is
that
Mexico
North
a bad
American-
trade partner? The trade agreement we have with Mexico was signed by Trump back in 2020. So if it's a but again, if it was the border, why didn't Trump make it ask? Is it really just 10? I mean, if he wants more than 10,000 troops at the border, but he could have gotten that without threatening a tariff war. That's what Biden did 3 years ago.
Oh, it's just a different negotiation tactic.
This makes no sense. We're trying to justify. I think you guys don't want to admit that this just doesn't make sense.
Hold on. I think when we say it doesn't make sense, I think it does not in all cases. Absolutely not. I don't think in all cases. But I think
then why did we drop the bomb in Hiroshima instead of just saying, hey, we got a bomb that's going to really mess you guys up. Like, you guys should stop the war. Like, sometimes you got to.
We didn't drop a bomb on Mexico. We made a tiny little ask. What is the big ask? So.
How many people came in during the time that Biden did that? And they did it. It was the largest surge of illegal immigration we've ever had.
But immigration right now is at the lowest point that it's been in 10 years.
Exactly. But when they did that and had that ask, not only did it not solve it, it got worse. So it obviously didn't take care of the problem. So what I'm saying is the problem didn't go away. We do need things to take care and show that we're serious about it.
What are we going to add? Trump just had an opportunity to ask for this thing that you say we need.
It's not over.
But at some point, like you know his type, and at some point, like, carrying a big stick doesn't really matter unless you've used it once, and people have seen that you can use it. And to me, he was just showing that, okay, I'm serious about tariffs. Like, don't mess with me.
He didn't use it.
But like, you're assuming, like, as I said, we've brought it before. Like, this is just the start, in my opinion. They pushed it off a month. I think there's going to be more negotiations. I think he's going to go after other countries. Most of the EU is already freaking out about what's going to happen to them. Like, to me, it was the point was to flex his muscles and show, like, hey, like, I wasn't just talking out of my ass when I was saying I'm going to use tariffs. Like, I will use them if I have to, unless you give me a reason not to. And this was just him flexing his muscles.
He signed an executive order and they called him, and the deal was made afterwards.
But again, it wasn't a real deal. What he got was something that Biden got for free. Is Biden just a better negotiator? Biden didn't have to threaten anything.
But what happened after the 10,000 troops? Because clearly, I know that's true, that 10,000 Mexican troops sent to the border, which resulted in the largest number of undocumented immigrants flowing from Mexico to the United States in the 4 years that Biden was doing. So did they just leave after like 5 minutes? I mean, how do you send 10,000 troops to the border and then have the largest amount of immigration crossing the border? That part doesn't make any sense.
Like 4 or 5-fold.
So what did Trump ask for that was different?
So he asked for, first of all, it had to be deployed in a certain time.
Well, they were obviously no longer there. I mean, if they were it's not like the 10,000 were there from, like, they must have. I haven't researched this, but they're clearly not there anymore, because if they were there, you wouldn't have the largest by 5x or whatever AJ was mentioning immigrants crossing. So they may have shown up for 5 minutes and now they left, but them showing up for 5 minutes obviously didn't do anything.
So what makes you think it's going to do anything now?
Do you think it's over, though? Do you think that's the end of it? We're not going to talk about tariffs with Mexico or Canada anymore, that it's done?
I think that there will be plenty more talk. There won't be any significant tariffs, and we won't get any significant concessions.
Okay. Well, that's where I disagree. I think there's going to be a lot more talks, and there's going to be
fine. And so far I'm right, but maybe you guys will be right later.
I don't know how you're right.
Because so far there've been no tariffs and no significant concessions.
So the tariffs were actually signed in, and the concessions were, and they went into negotiations for a 30-day period. The tariffs haven't been taken off. The executive orders went in. The tariffs aren't off. There's a 30-day pause in which they're able to negotiate. If
you haven't won, Jay, back up your roll. He's been president for 2 weeks. The tariff thing happened 3 days ago. You can't be calling victory yet.
No, I'm just saying, so far, my prediction that there would be no tariffs and no major concessions.
2 weeks into his presidency,
the tariffs are in place. They're in place, Jay.
Yeah.
There's not a single thing being tariffed.
In the first 2 weeks, that's correct. Good.
As of right this moment, as we're recording this, not a single thing is being tariffed.
All right. Well, so Jay thinks we're not going to see anything else. AJ, you think we're going to see any more significant happenings with Mexico in particular?
I think we'll go through negotiations. I think tariffs will come. I don't think they're going to be that big. I think the laundry list of things that we want will be evolving. And honestly, I don't even know that Trump knows.
All right. Well, let's finish with China. How do we think the China thing is going to shake out? Do we think it's going to be similar to Canada and the U.S., or do we think this is just all a way so that Trump can take his sovereign fund and buy TikTok?
Oh, we didn't talk about the sovereign fund to buy TikTok. That's a topic for next week. This is where I think the tariffs is a negotiating point. I mean, obviously, we've talked about Taiwan. That's a big deal. And I think for China, there's so many. Taiwan's just one of the so many things that are on the table that I think this is definitely a bargaining chip that he's using to see.
And I feel like China knows it too, because they went through this back in 2018, right? And it's much different, their reaction. Like their reaction last time was like they put like a 25% levy on like agricultural products that were specifically targeted for like, okay, what is his base, Republican base? What are their industries? And it felt like they went right after those industries and they were coming at them. And then this time it's kind of just like, okay, what's the least amount of damage, but we could still seem like we did something.
Yeah, but keep in mind, and I agree, Mexico is much different than Canada or I'm sorry, China is much different than Canada and Mexico. And it's a lot more complicated situation and there's a lot more to be negotiated there. But keep in mind, while I think what China did in retaliatory tariffs was pretty meek compared to what they could have done. And I think that a lot of it has to do, again, with the fact that their economy is suffering right now and they can't afford to take a strong stance. What they did do is they focused on energy. And so they're going to hit our energy exports, which is probably the thing that in this country we want least to be hit.
Wow. And Trump did run on the fact that he's going to get gas prices down too, right? So that's Canada recognized that too. So they went after that, and they're basically saying, okay, if you're going to do this, then we're going to go after something that you said you were going to take care of.
Yeah, but wait, hold on a second. But let's just make sure we're all on the same page. Maybe after a couple of my whiskeys here, but if there's a tariff that's going on U.S. products going to China, which is what a Chinese tariff is, why would that affect the price in the United States versus affecting the price in China?
It wouldn't, but it would hurt oil exporters in the U.S. Basically, it costs more to sell our energy over in China, and so we're going to see a hit to our energy exporters. It's not necessarily
right. You either have to.
It's not like Exxon and these energy exporters are really hurting. We're at 10 or 15%.
The billions of dollars they had in profit last year.
I want to connect the dots for the audience and also for myself, which is how does energy prices go up here in the United States if somebody like an Exxon, for example, they get taxed in China, they can't sell their product. They've got to raise the prices in China in order to survive. Their bottom line gets cut because of the tariff. How does that impact the price of gas here in the United States?
It's unclear because we don't know if American exporters are going to be willing to lower their prices to eat part of that, in which case we may see the price of oil go down. It may be that we're going to see China getting oil from other parts of the world and paying more, but less than they're going to pay with the tariff. In which case we could see prices go up, but not the full 10% of the tariff. The other thing at play here is that today, apparently, Trump put sanctions on Iran to basically try and get their oil export to zero. And he did that in his first administration. He was pretty successful. Then they started going around the sanctions like at the end of his administration and a whole lot during the Biden administration. But he's doubling down to basically try and keep Iran from exporting any oil anywhere in the world.
Even threatened that he'd bomb them.
Yeah. And so again, that's a complicated situation because it may drive oil prices in the wrong direction. But from a political standpoint, that's where a lot of this gets complicated because we have economic goals and we have political goals. And I think if I would have done this topic justice, I would have started with pointing this out, that a lot of times the political goals and the economic goals aren't in sync. And a lot of times, and I bash Trump a lot, but let me be clear, he's in a tough spot. because he's made a lot of economic promises and he's made a lot of political promises, and a lot of those promises are great. The problem is that in some cases they're at odds, and energy is a good example of where trying to get energy prices down, but at the same time trying to get our trading partners to do what we want. We may find that those two things are very much at odds, and he's in a tough spot there. And so,
but he got his win with Colombia too, and that really bolstered him. And I think that he's targeting clearly people that, first of all, there's a pretty big imbalance, and meaning it's just in power. Like, so he feels like he can get away with it or do it. And I think when you look at some of these targets, right, the problem is that he may be shocked by targets that come after us, where that imbalance doesn't exist as much. Now, they may be isolated, but energy is one of those things, as in there are other big players. For example, if you go after China, do you end up pushing China more into Russia's hands? And does that start to have a negative geopolitical effect on our power standing and things like that? So the third order political consequences, like you're saying, we don't actually know how those play out. And they definitely may not be what he wants.
It does seem like they're a little bit more chummy than last time. Like the last time that Trump was president, they're a little bit more chummy. They had their high-ranking official at Trump's inauguration, highest ever ranking Chinese official at a presidential inauguration. They've been talking a bunch. Trump's already talked about using China to help with the Russian and Ukraine situation.
And the tariffs were lower.
Right.
They were 10%.
Yeah, originally he said 60, 100, and now he started at 10, even lower than Canada. Like, what? Come on, man. Like, why are we going
But he said there's
Canada?
no negotiations. Do you guys believe that? I think that 10%, yes, but anything above that, I don't think so.
Yeah. Anyway, so we should see. So as we said, this is just to stay for a month. Maybe we'll be back talking about this a month, or maybe Jay's going to be right. We won't be talking about it at all because it'll just go away without any significant movement. But Trump also said that
China wasn't a stay, was it though? He didn't.
No. China's still there. We'll have to figure that out, and we also have to figure out, because Trump said European Union's next on his list. So,
and I think that this is kind of important. AJ, you mentioned the win in Colombia and how that was good and everybody won there. But let me just share this real quick. This is the price of coffee. And what we see here, this is
again with the coffee, Jay. We talked about that last episode. No one cares about the coffee.
AJ brought up Colombia, and I'm simply pointing out that no tariffs on Colombia, and yet the price of coffee has been at an all-time high for the last week or two, simply because of the threat. And so, yeah, we can say that there was nothing bad that happened there, but the reality is Americans are paying more for coffee right now because of it. And you can say, oh, it's just coffee. Well, what happened was that? Yeah, it's just Colombian coffee. But what happens next week when it's just avocados, or it's just auto parts, or it's just pharmaceuticals, or it's just gas? At some point, it's going to be more than coffee.
And I guess you also have to consider, though, like, is the benefit outweighing that? Like, people paying $7.50 instead of $7 for their venti coffee at Starbucks. All right, we got to move on, though. We've been talking about this long enough. And Mauricio's, I know, was just chomping at the bit to get talking about this. I got his email today talking about NMHC. He had a guest on talking about NMHC. He's really excited about this conference in Vegas at the beginning of every year, multifamily industry and their annual meetup in Las Vegas. And as I said, it's called NMHC. This is typically a kickoff event for a flurry of activity that starts off the new year and is filled with optimism and celebration, a lot of parties, a lot of different lenders put on these amazing parties and throw money around, and it's usually this great event. However, 2024 NMHC conference, it was a bit of a mixed bag, and people were hoping that 2024 the transactions would really ramp up, and that never really happened. So Mauricio, I'm hoping to get a little bit on the sentiment. I didn't go this year, so what's the sentiment from this year's NMHC, and what can we expect going forward?
Well, you don't do anything. I'm surprised. How come Ashley usually goes to these? How come she?
Well, it's a bit of a sad story. Ashley has been every year, but this year, a friend of ours, 44 years old, passed away from cancer. So we had to go to the funeral there. But yeah, so it's I was trying to avoid that, but it was a sad story, but great celebration of life and everything. But we had to attend that instead of NMHC at the last moment.
Yeah, so I mean, NMHC, National Multi-Housing Council Conference, this year was in Las Vegas, and to full disclosure, I did not go. And unlike your other buddy, Jay, I like to give credit where credit is due. And this credit goes to my buddy James Ang, who is the national director of Old Capital. I don't know if you guys use Old Capital, but they're a big time lender. And James went to the event, and he basically, I guess, his outcome from the conference was very similar to the conversation he and I had last summer. This was not a recent interview I did with James. I actually interviewed James last summer, and he talked about a lot of things that were brought up at the NMHC meeting. And at the end of the day, the sentiment, let's say, that came out of the conference was, among a lot of things, that distress was on the horizon. In fact, there was this new motto, which I'm starting to hear from a lot of different people. And I know even, AJ, I know you talked about this happening in other asset classes, so I'm definitely interested in hearing your perspective on this. But we've always heard about this, hey, survive until 25. If we can just get to 2025, make it through a tough 23, a tough 24, let's get to 25 and everything's going to be hunky-dory.
That was last year, right? And last year NMHC 2024, it was survive to 25. Let's make it through
survive till 25. And it sounds like, I don't know if this is the catapulting from this event or not, but I'm starting to hear this persist until 26 now. This seems to be like the new motto I'm starting to hear more and more about. And the reason
I feel like that's because I listened to James Ang on another thing. I feel like that's him trying to make fetch work. Like he's got this catchy thing that he's trying to like, okay, I'm gonna coin this right now, and he's trying to make it work.
I mean, I'm pretty sure some of this might be 20. Just come up with some names for 27, 28, 29, 30. I came up with
trying to think of
30.
something for 27. Yeah. I can't.
Yeah, I came up with something about 30, and I've already forgotten it. But the bottom. Let me just explain what James was telling me not a year ago, but last summer, and that is that lenders, unlike the single family market back in 2008, lenders are in no rush and in no hurry to foreclose on these properties and take these back. In fact, he was telling me back last summer that about 95% of lenders were willing to work with the operators. Again, we're talking about specifically multifamily here, but they were willing to work with lenders so long as they weren't behind, so long as, things weren't terrible, they were making their payments, even though their bridge loans were coming due. And remember, these bridge loans were really, really popular back in 2021, 2022, because conventional lending basically made it hard for people to buy properties. A lot of folks turned to these bridge loans. In fact, the vast majority of the loans from 2021, 2022 are these bridge loans. And those bridge loans were 3-year loans. So when you just do the basic math, loans that were issued in 2021, became due in 2024. Some of them are due in 2025. And there was this big fear from everyone, like, oh my God, all these loans are maturing.
For the record, Mauricio, too, those bridge loans, those were opportunistic. We could talk about like, oh, they couldn't qualify. People were qualifying for Fannie and Freddie loans, but Fannie and Freddie, at the prices that were being asked, would only give them 55 LTVs, and these bridge lenders would give them 75, 80. So they took the bridge loans because then they would only have to raise half as much money.
Correct, because the conventional lenders were willing to lend as much as they wanted to, except the DCS, the debt coverage ratio didn't justify more than 50 or 60% LTV. And so obviously they wanted to go to these sort of a little bit more exotic loans, which gave them more of a 70, 80, sometimes even 90% loan to value, so that they could just leverage it out. Never in their wildest dreams did they think that the interest rates would go up as fast and as much as they did over the last couple of years, because all of these folks, not all, let me just backtrack a bit, not all, but the vast majority did have rate caps involved. They had an insurance policy in place in case interest rates went up more than 200 basis points, 250 basis points. The problem is we got there. We got to 250, even more basis points. So now their loans are coming due. Their interest rate is resetting at a much higher interest rate. Literally, I've talked to folks who bought properties that were in the 4% interest rate range, and they were going to be resetting at like 9. So it's like they just can't handle that from a cash flow perspective. So that's the problem that people can come. And what James told me back last summer was that lenders were willing to, quote unquote, extend and pretend. As long as you weren't in big trouble and you could kind of survive, they would extend the loan for another year. They would charge you some fee, obviously an extension fee. They would require you to bring some money to the table. either to buy a rate cap, reserves and all that stuff. But the bottom line is it's kind of been swept under the rug. This is kind of what my point was. Like when I heard that from James last year in December, it was like summer of last year, I'm like, oh my God, things are coming down the pipeline. And then for the last 6 to 8 months, we haven't heard anything. In fact, you've kind of heard the opposite a little bit, where you've heard people saying, hey, look, prices are starting to come down. Things are starting to pencil a little bit better. Maybe this is the beginning of the new cycle. And then what I heard, not just from James, but from a lot of people from that conference was like, crap, this is still there. This issue of the underlying issues of these extend and pretend loans are still there. Until those get resolved, we're not going to get a clearing of the market that's going to allow us to start that new cycle, right? And so lenders still are hesitant to foreclose. They'd much rather come in. And actually what they're doing is they're switching out the operators, the sponsors. They're like bringing in more experienced sponsors, giving the new sponsors a little bit more leeway. But the last thing they want to do is foreclose on these things, but that is causing this pent up potential trouble out there. And at some point, they're going to have to bite the bullet, because right now what they're banking on is this kind of a hope strategy. They're hoping that interest rates were going to come down, people are going to be able to refinance, and people are able to survive this stuff. But that obviously hasn't happened. In fact, interest rates have been going up. I got an interesting email from one of my newsletter folks who had been talking about, he's in a particular market on the East Coast, but I'll just read you. And again, this is anecdotal, but he said that he was talking to a local bank on the East Coast, and the bank was telling that she was shocked at the number of mortgages that they have in default and how many they will now be foreclosing on. Now, again, that's an anecdotal thing on the East Coast, but there seems to be a lot of these crappy loans still on the books of the lenders. And until those get cleared out, there's this potential that at some point they're just going to have to bite the bullet and start liquidating. And that's cause for concern. And that's what kind of was the sentiment.
It's a 25% increase.
It has gone up. The delinquency rate has gone up. Don't get me wrong. It's gone up. But when you're talking about like delinquency rate, we're not like talking about office where we're like, double digit delinquency rates. Like we're still, even the highest what we're at, we're still like a 4.5 delinquency rate. So like it's still not the majority of the market. And like when you look at it, so like it's not like the entire market turned over in 2021 and 2022 when all these crazy loans were given out. Like even if you look in the high end, and I heard I think it was Michael Becker talking about this. Even if you look at the high end and you're like, okay, let's say even 20% of the entire market turned over in those 2 years, which is high. That's a lot, right? 20% turning over in 2 years. And then let's just say like 80% of those took these crazy loans. Then we're still only talking about, 16% of the entire market got these loans. And you're assuming that all of them are all of a sudden in trouble? No, like some people would have got these loans and they would have figured it out, or they would have, had good fundamentals. And so it's not like this is all of a sudden the entire industry's out crazy like that. And I think the lenders are being smart that they don't want this all to hit at once. And we did miss the mark in the fact that we believed that interest rates would come down by now. And it was even giving us hope too that we would have the real estate guy in the big office and he would help rates come down. And the exact opposite has happened, even though, we saw it with, we saw a rate decrease where they brought down by a quarter point. And then all of a sudden the 10-year treasury goes up by 75 bips. And so like, it's kind of had the opposite effect. But at the same time, I do think we need to point out that if you have made it to this point, then I think there's light at the end of the tunnel. You might not be able to sell very soon, but people, all they want to talk about is these loans, the loan rates, the interest rates. That's what's killing everybody. No, there was like a perfect storm of everything happening all at once that was killing everybody. We had, because of those low interest rates, because people were getting 3% loans, new construction took off, right? And the problem with new construction is it takes 2 years to build a multifamily property. It's not like self-storage. AJ could probably put one up in 6 months or something. Like it takes 2 years to put these things up. So all of a sudden, though, when you go forward those 2 years, those properties that were in 2021, 2022, they're all of a sudden, like 2023 even, they were coming online in 2024. And So what does that do to rents? All of a sudden that we have this massive supply, it brings rents down. What else have we been seeing? Insurance rates, especially Florida, Texas, these other places with natural disasters, insurance rates skyrocketed. That's an issue. COVID, the biggest thing that we saw was with COVID, all of a sudden this state, Texas, where we used to make jokes that we could have people's crap on the curb after 13 days when they didn't pay. Now, all of a sudden, because of COVID and all these rent forgiveness things, all of a sudden evictions now, they're taking months, 3 months in Texas. It's 90 days, 120 days sometimes to get someone out. It never used to be that issue. So you're having that issue. Taxes were crazy. We just got our tax protest back on one of our multifamily properties from 2022. They just settled the 2022 taxes for us. So there has been a litany of issues going on. So I guess my point is that all of these things look better. All of a sudden the occupancy rates, you're seeing them all come up. You're seeing the new supply, the absorption rates at the back half of 2024. All was great. They were all over, like the absorption rates were excellent at the back end of that. Rents, they've bottomed out. They're starting to come back up. All of these things are now getting better. We're like, even insurance, like they took a huge hit, but if you survived it, like it's not going to all of a sudden, we're not going to see 100% increases anymore. I feel like
but Kyle, you can survive all of this stuff so long as you can survive, right? So, I mean, I understand that all these things are getting better. And again, this is coming from an outsider. You guys are in the trenches, so I'm definitely going to defer to you guys. But from an outsider's perspective, it's the old story. Like if you have a credit card thing and you've got monthly payments to make, if you don't make your payment or your loan is coming due, it doesn't matter that everything is hunky-dory and you've got a confidence that things are going to be going well in the future. If at the end of the day, your loan expires next month or in 90 days, and you don't have the funds to be able to refinance, you are dependent on the lender. If the lender doesn't give you some kind of a modification, doesn't come out to help you, you are SOL. No matter how hunky-dory you think.
But they are, though. You just said they are. They are modifying it. They are helping people out.
But the question is how long can the banks continue to extend?
They have been. They're slowing that down. The extend and pretend has gone on for 3 years.
Right. So what happens when the banks are like, you know what, we've been patient, but dude, we can only, at some point we got to start making some action.
I think the issue that we have is that it's starting to become obvious to everybody, not just us, but obviously to the banks. And maybe it's been obvious to the banks for a while, but I don't think so. It's starting to become obvious to everybody that interest rates are not coming down this year. They may not be coming down next year. They may not be coming down the year after. The reality is there's a lot of things in this current administration's agenda that could be very good long-term for this country, efficiency and cutting budgets and all those things. But a lot of those things are inflationary. And again, this goes back to the whole politics versus economics. We talk about deportations. There's the political part of deportations, then there's the economic part. We talk about tariffs. There's the political, then there's the economic. And the reality is that a lot of the stuff that we're talking about here, if we do things to affect the right political change, it may hurt us economically from the perspective of keeping interest rates higher for longer. And so I wouldn't be surprised if we see interest rates not come down in the next year or two or three. In fact, I think the only way we see significant drop in interest rates is if we have a major recession. So barring a major recession, I think we're going to have interest rates higher for longer.
We don't need them to come down that much though either. Like the problem is right now is we're still 4.5% on the 10-year treasury. And like even historically, if you look at last year and the forward curve and stuff, that can come down a little bit. We can have that closer to 4. And not only that, I think what's killing us right now and what Trump is killing us the most is volatility. Banks hate volatility, and they pass that volatility risk on to the borrowers, and they will do that in the form of a spread.
Rates aren't coming down because there's no buyers. So those long-term rates, they're not buying those out right now. So do you see that what rolled over? And it's specifically around the government debt. The buyers have talked about this. They cannot get those T-bills out in the long term because the long-term outlook on the U.S. affordability and paying its debt has gotten so bad. Those long-term T-bills aren't selling because people are like, it's not worth it because your debt problem is so astronomical. You have those long-term T-bills will not turn over at lower rates unless they get the financial position of our country under control. People are open about it. It's got to be, and so you like rates have to come down, but you have to have, first of all, Jay's right, the money supply. It's all about the money. So unless we have a contraction, you're eliminating debt, you have unemployment rise, I don't know how the money supply is going to go down. But also, though, I think, Kyle, you're right. It doesn't have to come down that much, and a little easing will help. And if we can get a better outlook on the government gaining more financial control, I think that can get some buyers back in. Interest rates aren't going to go down massively, but I think if we could get some cushion here in the next 2 years, so we project, I don't know about you guys, I underwrite no rent increases at all, none on new products. 3 years out, 0 rental rate increases. We also do not underwrite lower interest rates. They don't exist. We actually underwrite higher. And we do that when we refinance or sell or anything else. And so right now, the market's adjusting, though, to these conditions. And with that, we're now finding deals. So I think that comes back to Mauricio's standpoint that it's starting to turn over. We're seeing it. I mean, I don't know about you guys. We bought one deal in 23. I think we bought 1 or 2 in 24. I've got 2 already and 3, 4 more under contract the fourth quarter. I'll do more in the fourth quarter or the first quarter this year than we did in the previous 2 because sellers are adjusting. And at these interest rates, it works.
I think you might be a little bit different too, though, because you don't have that kind of lender of last resort that we have with the agency loans and that option of always being there. And so when there's any like uncertainty in your market, like your lending kind of just evaporates, right? Like it's like your terms go out the window, and like
our lending isn't nearly as good as yours,
right? And like right now, you talk about like our underwriting. First of all, for the first time, we are underwriting rent growth. Last year we didn't, but now.
Everyone listening, we're in 2 different sectors. So sorry, everybody listening, I'm in a self-storage industry. They're in multifamily industry. So we're not talking about the same industry.
But because of some of the things I said, where it looks like everything's turning the opposite direction, that we are seeing rent growth. We are starting to underwrite rent growth, but we're also, as far as loans, like I can underwrite an agency loan at fixed debt right now. And a 5-year loan. I think that's the most popular loan right now. Mauricio, I don't know if James talked about that, but I think the most popular loan right now is a fixed 5-year agency loan. And that's because like you can get that kind of the best rates. They're all kind of put together, and it allows you that flexibility of, hey, if I do need to exit at 3, then I don't have this massive prepayment. It's only like the one you're getting out kind of like a year and a half early. And because there's a lot of sentiment, I've heard actually, the whole like persist to 26. I've heard that like, most people are saying like 2027, 2028. That's kind of when we're going to come back to the old highs. And that lines up with last time, right? Last time, what do we have? Like 2027 or 2007, 2008. And that wasn't until like 13 kind of that.
But the difference is the prices haven't adjusted. So I agree with Mauricio on this side. We have not seen cap rates rise like they should have because of the bankings just like push it off. And so that's allowed nobody to do it. Why would we sell? Or I think that as that comes to an end, hence the reason I think in the last 6 months, we've seen cap rates rise. And I think it's largely to do with that paper that needs to turn over. People saying, I'm done bleeding money if this paper has to turn over. And what we're not seeing in defaults, as in people defaulting, we're seeing equity loss. They're writing off the equity and they're selling it at the notes. So although I don't think we're going to see mass defaults because of the conditions, things we've talked about, and even the amount, like Kyle, you talked about, we are going to see what paper losses. And investors will see losses because they're going to be selling them at cap rates in order to get them gone at something that is more favorable.
When we say, and by the way, when we say equity loss, we mean LP losses in the
investor loss, whether that's Kyle, you personally or LPs. Yeah,
Kyle, let's give some massive value to the audience because you, as you probably are aware, I consider you one of the more conservative underwriters out there. With everybody's a conservative underwriter, you are at the top of the list of conservative underwriter. When you say you are now starting to underwrite rent increases, what does that look like? It used to be 2% a year. Is it? What are you doing now?
Here's the problem is it's very market dependent, and we're in a few different markets, and it's different for each market. Like if you're, let's say we don't have anything in Austin, and we're not actively looking in Austin. But if you're looking in Austin, I think you're still underwriting flat, probably even rent decreases at this point, because they still have a lot of new supply issues coming on, and it's a pretty good general rule. The whiplash effect, right? Like you see places like Austin, Phoenix, and all that stuff. Their rent increases went up crazy, but then they're going to come back down
20%, like
and they're going to come back down versus some of these other places that were a little bit, they a little bit more steady with their increases and decreases. They came down quicker, and now they're back on the upswing. So like, we're not talking about like, we went through a crazy time, and I never did this, as you said, conservative. I never underwrote more than a 3% rent increase ever in a market, but you were seeing some people doing 5-6% rent increase projections, and some of them were right. Like they were
right for 6 months.
Yeah, but there were markets that took off. But as Jay said, for 6 months, and then all of a sudden, they're pro forma'd out. They were still having 4 or 5% increases in year 2, year 3, year 4, and that's kind of where they got screwed. So,
the bigger issue is they were assuming the 4, 5, 6% rent increases, but they were ignoring the fact that those rent increases were coming from inflation. So they should have been assuming 4, 5, 6% expense increases also, and they weren't.
Right, exactly, and it's so yeah. When I'm saying I'm pro-forming huge rent increase, or not huge rent increases, like they're moderate. Like we're talking about like somewhere in the 2-3%, 2.5%, something like that is kind of like the last one I did. I think it was 2.5. As far as a rent
that's in line
increase.
with what I was seeing back in the 2020, 21. I mean, again, to your point, some were definitely underwriting 5 or 6, especially the first year, right after the value add, they would do a huge rent increase. But like once you're stabilizing, I felt like most conservative underwriters were in that 2 to 3%.
Yeah, but if you're in the case, if you're talking about places like AJ are talking, where like these are distressed properties, and they are things that like there's a reason for that distress, right? And a lot of them is like these C-class properties were all of a sudden trading very close in cap rate to A-class properties. And so people took these over and paid way too much for them. And you're seeing those cap rates kind of expand. That the spread between the A and the C is kind of getting bigger again. And so like if you're taking those C-class properties, you got to look kind of micro a bit at these areas and say, okay, are people moving like Houston? We have a bunch of properties in Houston. Like there's a big difference between, different zip codes in Houston, and there will be zip codes where I'll be like, that is negative rent growth. We're going to do negative rent growth there if we're even going to go into that area. Versus there's other more desired areas that you're like, okay, like you looked at the new supply just because of geography. There wasn't a huge new supply coming in there. It's already tapered off. New supply is way down, and you're seeing a lot of demand coming in there, and then you can underwrite those. So I guess my point is that I went through a time there where it was zero, if not negative, and we are seeing the opposite. And I guess that's there's discussion where I'm saying like, we in the multifamily, we saw these were negative rent growths, and that still hasn't hit CPI. But so that's a discussion for another time of whether or not we should be seeing this shelter component bring the inflation down. But we are seeing it come out the other side. New supplies tapered off. Rent growth has come back up. Occupancy has bottomed out, and when we talked about bottom out, like it never got below like 94 or something on average. Like we barely touched below 95, and it's already back up to historical averages. Like we're at the point where I think we could start to do more standard underwriting practices.
Yeah, I think we're the fundamentals are getting better, but just to set some expectations for anybody that's listening on rates, because I know there are a lot of people who are hopeful that rates are coming down this year or next year, and just to put some data behind it, historically, and there's wide variation, so this isn't necessarily going to be the case, but historically, we see mortgage rates somewhere around 3% above the federal funds rate. That's the historical average. Sometimes it's much more, sometimes it's much less, but 3% is a good average. As of today, the federal funds rate is somewhere in the 4.25% to 4.5% range. Mortgage rates are in the 7% range. So we're at about 2.5%, 2.75% difference between federal funds rate and mortgage rates. And so if the historical average is 3% and right now we're at 2.5%, that means the federal funds rate, the Fed could cut rates another 0.5 point. And realistically, we probably shouldn't expect mortgage rates to drop. So we're going to see more. We're going to need more than a half point drop in federal funds rate to see mortgage rates drop. And here's the thing: are we going to get a half point cut this year? Are we going to get 225 basis point cuts this year? They're talking about it, but I think it's much less likely than it was a couple months ago. And so I don't think we're going to see rates coming down, mortgage rates coming down this year, and next year is a wild card as well.
And Jay, you and I have talked about this before, but that might be the historical average. But remember, especially the 10-year bond market is one of the deepest, if not the deepest, worldwide bond market in the world. So it's not just dependent on the Fed's fund rate. It's actually dependent on what is the demand for these bonds worldwide. And that's really what moves the price of these bonds. And so, yes, that's part of it, but it's also the demand and the supply of the market. And so that's why you're seeing a scenario right now where the Fed is cutting rates, but the bonds interest rate on the bonds is going up. Why is the interest rate going up? Is because people are selling it, meaning the world market is selling bonds. Why? Because they think inflation's coming up. They'd rather put $1 in something more aggressive like the stock market or real estate or some alternative thing rather than put it in a safe asset because they believe inflation is down. Growth and inflation expectation is high. They'd rather put that dollar there, and therefore the demand for these other assets goes up. The demand for the 10-year treasury goes down, thereby increasing the interest rate.
A lot of CDs are turning negative. They're readjusting and they're coming down, and then those CDs and what they're paying out for individuals is under inflation. So we're starting to see a reversal in some of these aspects, and that's going to drive buyers away. If you have high inflation, even if they move down rates, I don't want to take a negative 100 basis point loss, so I'm not going to buy it. So even if the Fed does come down, just like private markets in a CD, you're not going to buy it if it's 6% inflation and 4% or 3% your CD, right? They're going to move out of it. And so those problems, that's a real driver right now.
Yeah, and we should probably talk. We haven't talked about this in a while, Jay. Maybe we should talk about it next week or the week after. But like the whole inversion of the curve, we haven't really addressed that in a while. And as we all know, the curve inverted. But we should probably talk about the status of the curves and what that means for the economy. Maybe on our next. We're a little long on the tooth here this week, Kyle. Yeah. So maybe we push that to next week.
All right. Any final thoughts then, Mauricio? Or should we just wrap this up and get into a top 10?
Well, if I could, can I filibuster for the top 10? Is that something I can do? I could talk for 2 hours if that means I can avoid the top 10.
You need more than 60% for a filibuster? Is the
I know I don't even have to physically filibuster anymore. I could just be like, hey, I just need 3 out of 4, so I need to convince my 2 other co-hosts, and I'm in. Yeah, let's get to the top 10.
All right. Well, so I thought that was a good discussion, by the way. So good job, Mauricio. Good job setting that up. I thought I liked it, obviously, because I got to talk about multifamily, which I love. All right. So if anyone was living under a rock like Jay, apparently, or Mauricio, they would have not known that there's a Super Bowl coming up. And obviously I want to talk about the Super Bowl because my Eagles are in it. And so I was going to do some, like top 10 Super Bowl teams with Super Bowl rings or, something like that. And then the voice of my wife came through. It was like, nobody wants to talk about that. Nobody wants to hear about football teams or anything football. You got to do something interesting that the people are going to want to talk about. So I decided to pivot, and I'm going to do the top 10 Super Bowl halftime shows of all time. If you didn't know, Kendrick Lamar is the Super Bowl halftime show. Bit of a controversy there because of the whole him and Drake thing. It seemed to be choosing sides, but then Kendrick Lamar won 2 Grammys on Sunday. So kind of quashed that a bit. The beef is over. And there have been some good performances, even in my lifetime. So I thought I'd go through them.
I got a quick story for you. This is the funniest thing I've ever heard. So I don't know if it's on your top 10, but the Janet Jackson.
Number 10.
Is that 10? Okay. So what was funny about that story is if you guys remember, Janet Jackson did a halftime show with Justin Timberlake. And there was a wardrobe malfunction. Apparently, I don't even remember how it was, but apparently...
I think that's where the term wardrobe malfunction started.
Came from. I was just thinking that, Jay. I think that's where that term came from.
So Janet Jackson's, I think one of her breasts became exposed, and I don't even remember if you saw it or whatever, if it was delayed. But the bottom line is, I thought that the funniest thing I ever heard was like Justin Timberlake always likes to assimilate into the black culture from a cultural perspective, and he was always like, "Hey, I'm in that culture." But as soon as that happened, he was as white as they can be. Like he didn't want anything to do and get associated with that mess. But yeah, that was one of the most memorable. So I guess it's number 10 on your list.
So number 10 on my list, but also some people seem to forget it wasn't just Justin Timberlake and Janet Jackson. You also had Nelly, Kid Rock, and Jessica Simpson was big back then as well, and she was featured. I don't know what she's up to these days, but she's pretty hot there for a while.
That's what she's up to.
Number 9, a bit controversial for some people, but it wasn't controversial how good his show was. Is Michael Jackson. Some people kind of boycotted him justifiably for some of the alleged things that he did, but he was number 9. Aerosmith, number 8. There was also Nelly also was on that. Mary J. Blige, NSYNC, and I think even what's her name? Britney was on that too as well. So that was quite the show. Number 7, Madonna with Nicki Minaj, LMFAO, CeeLo. Number 6, Beyonce. That wasn't too long ago. She obviously slays every time she goes out, as they say. Number 5, this is my favorite. I would have had this as number 1. Number 5 was Dr. Dre with Snoop Dogg, Eminem, Kendrick Lamar, Mary J. Blige, and 50 Cent. I don't know if you guys watched that. It was only a few years ago, but it was kind of just like every couple minutes, a new person was coming out on stage that you weren't expecting. It was just like person after person. It was all people like I grew up listening to. So that was amazing. Number 4, Rihanna. Everyone loved it because they found out later that she went out and performed and she was like 7 months pregnant or something, and still crushed it. Number 3, Bruce Springsteen, the boss, always puts on a good show. Number 2, Bruno Mars. Once again, he actually had Red Hot Chili Peppers come out with him, and that was an awesome kind of mashup. And then number 1, I wouldn't make you guys guess, but apparently you don't watch Super Bowls. Prince was number 1. It's kind of just everyone loves Prince.
Can I do a shout out though, because this is not a halftime show, but Whitney Houston's rendition of the national anthem back in whatever it was, 1990 or 1981, hands down the best national anthem of all time. I've heard rumors that it was lip synced, but if you just Google, if you haven't seen it, Whitney Houston's rendition in the Super Bowl of the national anthem, hands down, if not the best, I would say the best national anthem rendition I've ever heard.
So, fun fact, when we get together for the Super Bowl, I have another buddy who's, I don't want to call him a degenerate gambler, but he likes to gamble a lot on football. And so on the Super Bowl, we gamble on everything. And one of those things is the length of the national anthem. You go to those prop bets and you can kind of pick everything from that to like the color of the Gatorade that gets dumped on the winning coach and to all of these different things. And so the over-under for the national anthem this year is 120.5 seconds. So you can bet over or under that. John Baptiste.
You should have done that. The prop bets. My favorite prop bet is the odds of a safety happening at the Super Bowl. That's like usually 4-1. But
so how much money would I have to give to that singer to get him to go over or under? Do you think?
Well, it's actually it's gotten so bad now that I think you could bet on 1, 2, 3. You could bet on 4 things just on the national anthem. You can bet on the length. How long the final word brave will be. The over under on that is 3.5 seconds. Will he use a piano is a bet. And will one of the coaches cry during the anthem is another bet. So like there's some great ones. You go check it out. Just look up Super Bowl prop bets, and it's pretty fun to check out. All right. Let's do plugs. We'll start with Mauricio.
We're not doing any hypothetical situations.
Oh yeah. Jay, you want to do that? That's. I'm sorry, I forgot about that. I know this is what you look forward to the entire time. So I apologize.
This is the only reason Jay has not left the podcast is because he wants to do these hypothetical situations.
I see him frantically adding them right now. I'm going to do the one that I had before because I thought it was interesting, and this is kind of a male thing. So women are just going to groan when I talk about this one. But this is the $1 million inch, and it's not where you think. It's on height. So you can either spend $1 million to add an inch to your height, or you get $1 million if you take away an inch from your height. What are you doing? Mauricio, what are you doing?
I'm taking the $1 million. I'm already short at 5'9", maybe 5'8 3/4.
So what would you go down? Would you go down to 5'8"? Or would you go down to 5'7"? Like how much you taking?
Dude, for $1 million, dude, give me $2 million, I'll go to 5'6".
There you go. So that's where Jay. What would you do?
I'm staying where I am.
How tall are you?
Somewhere between 5'9" and 5'10".
There's no way you're 5'9" or 5'10". You're shorter than I am, Jay. Come on.
What?
Oh, I see a height off coming next time you guys hang out.
I'm
Back to back. Let's do it. Shoes off. AJ, what are you doing?
I'm gonna be with Jay in a couple weeks, so maybe we'll do a little standoff right there, get it on video.
Yeah, we want to see that on social media. AJ, what are you doing?
Perfectly fine where I'm at.
What are you at?
5'10".
So you would turn down $1 million to go to 5'9"?
Yeah.
Yeah, $1 million is pocket change for AJ, so it doesn't really matter that much. What
Dude, that
10
covers
million,
your
AJ,
fuel. Wait, that covers at least 1 year worth of fuel on your 2 jets, dude. Come on.
That's true. Yeah, I'm going to be boring too. I'm not moving. I'm 6'1", and I feel like 6'1" is 6'3" is perfect. Like if you get above 6'3", you start getting into like actual issues in life where you'd be being too big for things like planes and stuff. Like I'm uncomfortable in planes, but I'm okay. But then I feel like if you tell people you're 6 feet, there's become this stigma that everyone assumes you're 5'11" or 5'10". If you tell people you're 6 feet, so 6'1", I'm happy with that. All right, Jay, just tell me what your favorite is here. I don't want to go through this same thing as last time where I tell you which ones are dumb.
You get $5 million right now, or you can flip a coin for $50 million.
I'll take $5 million right now.
I'm flipping for 50, man, for sure.
Dude, $5 million. You got to understand. You got to turn the lump sum of money into an annual cash flow. You could get that's $500,000 a year of passive income.
$50 million is $5 million a year.
Yeah, but basically, just play the odds on this. Like what's age or Jay? There's a term for this in poker, right? Like the pot odds.
Expected value.
Yeah, like you got to go for the 50. I feel like like it's more interesting to go 5 and 20 or 5 and then at least it's it.
But there's another term in poker called utility function, which is basically you don't always go with the expected value. Sometimes you want a lot less risk. Sometimes you want a lot more risk.
Plus, in poker, you never play your cards; you play the man across or the cow.
There you go.
AJ, 5 or 50?
50. Spread's big enough.
Yeah. Where would your crossover be? Would you do 20? Flip for 20 or 5?
Well, it'd have to be 10 million. That's double the EV would be double, right, Jay?
Well, then that's easy. You just take the 5.
25 is the expected value. 25 million.
Yeah. Yep. I'm with you.
You'd still flip for 20, AJ?
25.
20 you wouldn't, though? You'd take the 5?
I think I might take the 5 at 20. Anything below 20 for sure.
Yeah.
You guys are freaking what are you guys smoking? If somebody said, hey, you could guarantee to get $500,000 a year in passive income to pay for AJ's fuel on his jet, are you kidding me? You would take it in a second.
Okay, here's one for you, Mauricio. $100 million right now, but you have to roll a die. If it comes up 6, you die.
I'm not doing that. That's
1 in 6?
5 in 6 chance of making $100 million.
Well, that's like Russian roulette. That's like 1 in 6 chance. It's basically Russian roulette.
Except you get $100 million if you survive the 1 in 6.
Yeah, I know that the EV on that is not even close. The value of my life is so high.
To who?
Now, if you would die, I would definitely roll the dice.
I would probably roll it, but my wife wouldn't let me. So the answer is no.
She'd make you roll it 5 times. Okay, last question. You have to choose to learn either when you die or how you die.
Well, learning how you die probably tells you when you die. Like if you're going to die,
it may or may not.
If I'm going to die of like pneumonia at some point.
Yeah. How do you know when? I got pneumonia last year.
When?
I'd rather know when for sure.
I'd rather know when.
Because if you know how and it ends up being something like, what if it's a car accident? Like,
yeah, you're like if I ever dummy in a car.
Perfect. That means I would never get into a car and I would tempt fate.
Yeah, but then you never just go out on the road. Like you never like you.
I would take AJ's jets instead.
Just helicopter everywhere.
Well, now they got the drones going, so I'll just take the drone.
Definitely when.
That would suck though. Think about that. When, like, to know exactly when you would die. That's a tough one.
Well, what if you found out? What if you wanted to know how, and then you found out that it was some horrible way to die, like long and drawn out? Now you're just spending the rest of your life thinking, "Oh, this is coming up."
or it could be any time. What if it's like, it could be like your heart just stops, or like, and you don't know, it could be tomorrow, or it could be, or activities
that's the good. That would be the good one.
Yeah, the good one is it could be happening at any time. I'm talking about like, what if you find out you drowned?
Yeah, you'd never swim again.
That's perfect. I would never go in the water.
It doesn't change it.
Yeah, then you would never go on a plane ride because if you took a plane, you might, it might crash into the ocean.
Jay, when or what?
Oh, jeez. I hate this question. I wrote it and I didn't want to have to answer it. I would probably want to know when.
My man.
I feel like it's a personality thing. Like people who like to schedule and plan, they're always going to say when. And people who are like, YOLO, I live.
Yeah, but if you find out it's like 3 years from now, you're not going to enjoy the next 3 years.
Yeah, but like it was going to happen anyway, though, Jay.
Here's the good news: if you knew you were going to die at 98, dude, I'd be going to McDonald's every day for dinner. For
Right.
I'd be doing so many drugs.
Fucking drugs. Like I'd be like,
hey, you want to try heroin? Sure, why not? I'll give it a go.
It would be suck though it would suck though if you got arrested and like thrown in prison for the rest of you. You got a life sentence.
I got 98 years on
True, but I'd go skydiving. I would Rocky Mountain climbing.
It doesn't mean you're not paralyzed for the next 35 years.
I guess that's true.
That's true. All right, let's wrap it up.
All right. Plugs, Mauricio, you got one?
Coaching with Mauricio is my new URL if you want to get mentored by the top syndication attorney in the country to empower yourself.
Probably the world, right? Like,
I was thinking more the universe. The universe.
I only hire the best in your mind.
Jay, what do you got?
DREdaily.com.
Go check it out. We got a lot more followers than we do have podcast followers. So let's keep growing that. AJ.
Yeah. I had a review of Conference Connect today and it's awesome. So, and I've used Conference Connect. I'm on there. Yeah, everybody should go check that out. I was so impressed with it. It's really, really cool.
Yeah, I got it back. It's my new background now. So yeah, go check it out. And if you want to get involved, reach out. I'm going to plug my wife first.
Only one. If you could only plug one thing, what would it be?
Well, I don't. The whole like joke about plugging my wife, like it doesn't really work because the next thing I want to talk about is go buy some Girl Scout cookies for my daughter. It's we put the link up that way I don't have to go door to door.
Somebody got your thing in the comments, by the way.
Yeah, Jay really helped out. Jay bought he already got me 1/8 of the way there just with his order. So appreciate that, Jay. Thanks.
Thank my wife. I was told she did it.
All right. We good? We all back next week?
Do it. Yeah.
We're doing it a day early though. We're recording a day early because some asshole needs to do something next week, and so we have to move the calendar.
Are we doing it Monday? Is that what we're doing?
That's not on there.
No, I think we're doing Tuesday.
Oh, okay.
Or Wednesday.
Well,
I don't know.
We're still releasing Thursday. So for everyone listening, first of all, go Birds. I might be insufferable next week because we're going to be Super Bowl champions by the next time we talk. But for all of the rest of you, I will see you next Thursday.
See ya.
See ya.